Hi and welcome to Real Binary Options Reviews, educational trading videos about binary options indicators. In this video I want to explain a little bit more about trend lines. Now trend lines are manually drawn lines on the charts which act as support and resistance lines for the price in similar fashion as horizontal support and resistance lines which I have explained in another video. In this video we're going to take a look in the trend lines. So trend lines are drawn by connecting the highest and lowest points of the price in a predetermined time frame. Now, maybe for this purpose we can take a look how this functions on a 1-minute chart. It also functions on a 5-minute chart. Let's take a look first at the 1-minute chart. Basically, you can apply trend lines on any time frame. Now, if I want to draw a trend line, let's say I'm starting trading around here. I see that the price was going up here and it started falling down. So this is kind of a highest point in this time frame of trading. So the next highest point I have is somewhere around here. So if I want to draw a trend line, I would connect this highest point and maybe this highest point, and I just want to change the color of this line so we'll be able to see it better. So this would be a valid trend line. If I started trading here, this would be the now the upper resistance level. So the trend line is defined by 2 touches. So here we had the first touch, here we had the second touch. And now when the price reaches this trend line, again you have 2 possibilities. You can trade the break or you can trade the bounce. This is similar to horizontal support and resistance levels. Now, if I want to draw a lower support level, you can see that the price is kind of now coming into a channel, downwards channel. So I would maybe connect this level and this level here, and this is now also a trend line which kind of acts as a support. You can see that in this case we really have a channel. And so it's defined by the 2 touches. So this would be the first one, this would be the second one. And once the price reaches this lowest support trend line, it has a tendency to bounce. Now you can see maybe we had one bounce here, which is not so obvious, but then we had a break. And now the price here retraced back into this channel. So let's see if it goes up. Now you can see this green candle here. If it goes up, now if I would want to trade a bounce, I would trade a bounce on this level. Usually I like to wait for the price to break before I trade a bounce. So let's say if I saw this situation here, this would be the point where to trade the bounce. So trade up with 5-minute expiry here, because we are looking at a 1-minute chart and the price is moving fast on these charts. So here you can see, as I said, this would be the place where we could place the trade down. So I'm just going to draw an arrow here and make it yellow so you can see it better. So this would be the place to trade to trade the bounce. So it would be 1, 2, 3, 4, 5-minute expiry. You see this this white candle closes here. So I mean it's white, it's a red candle, white candle. So it closes below our entry position. The next attempt of a break we have in the next situation here. So each next attempt of a break will be less secure to trade the bounce. So we had here the definition of this trend line. This was the first, the highest level, and then at this point it didn't come to this level, and it broke below the lowest point, and now this is a good opportunity to trade the first bounce. Now as we get the second break, already the price can actually form a break, so it's always better to trade the first situations. Now as you can see that the price is now changing, so I can draw new trend lines. So I can draw the lower support level by connecting this point and this point here, and all these levels that I have drawn before, let's say this one and this one, they are still valid. So as the price actually breaks one of the trend lines, in this case, as it breaks the resistance trend line here. So now, as the price is trading below this trend line, it means that this is a resistance trend line, and this is the support trend line. As it breaks the resistance trend line, comes out of this range, this trend line will become a support. So you can see the situation here. Once the price now tries to get back in this channel, the trend line acts as a support and the price bounces off this channel. So now we can see that it bounces off, and then, so this was again the first attempt of the price to come back into this channel. So again, as I said, here we had the first attempt of breaking the trend line above, so we placed the trade up here, and here we have the first attempt after the break for the price to come back into this channel. So this would be a valid situation to trade up. And now, as you see, the next attempt actually results in a break, and you can see that this trend line here is also valid, and the price retraces here. You can see there is some resistance, but it continues moving further down. Now, we didn't get the closure below this level with this candle, but we get the closure with this candle. So this would be again the situation where you could place the trade up. So I'm just explaining a little bit, and now we can see, okay, so here is the next break. This trend line, this resistance line, was already broken here. So it means the price already traded above this trend line. As it breaks again on this point, I mean, you could place the trade down here on this level if we would expect for the price to continue moving lower, but this was already broken. So the next valid resistance level would be by connecting this point here and these highest points here. So let's see if the price actually comes and touches this level. So okay, on this break here, we have the first break now above this trend line, and this is also a good opportunity to place the trade down. So I'm going to draw an arrow here. This would be a 5-minute trade down. See, 1, 2, 3, 4, 5. It would result in a winning trade. It would be just a little bit below our entry position, but you can see now the price retraces back and then rebreaks with this green candle closing above the previous point of resistance here. So it means now it has more potential to continue moving up. But on the other hand, we can also now draw, again, I have the opportunity to draw maybe by connecting this point and this point, I can draw a lower support trend line. And you can see it was actually, this trend line was supporting the price on all these levels. Here the price came in kind of a triangle if we are looking into this support trend line and this resistance trend line, and it's trying to break out. So this was the first attempt. As I explained before, it's always more secure to trade the first attempt. So this was the first attempt, which would result in a winning trade. Now on the second attempt, you are not trading. Now if we get a bounce back to this level, then it would be also a good opportunity to place a trade up, because if you watch the horizontal support and resistance levels and breakout patterns, then we already have a breakout pattern here, because we see that the price broke above this level, then retraced, bounced off this level and closed above this level. So let's see what happens next. So after I get this candle, this white candle here, it would be a good opportunity to trade up, but in this case with a little bit more longer expiry time. So this would be maybe, if we are looking at the 1-minute chart here, I would say maybe 15 minutes, 10-15 minutes trade up, because it has the potential to move all the way to this level. It still has the potential to move lower. So if you're impatient and you want to place the trade, then you are placing it here on the break, on the re-break here. But if you want to be more secure, you would probably want to wait until the price touches maybe this level here. So let's see what happens. Okay, so now it rebreaks. Now this is the better situation. So in this case, on this break you could place a 5-minute trade up. So here we set 10 to 15 minutes and this is 5 minutes. So let's see what happens. So it would be, in this case, in 10 minutes trade, it would be a winning trade, and in this case, in 5 minutes, it would also be a winning trade. And now, again, I can see just by looking at the price, here we are getting some tops of these candles. So I can draw a trend line by connecting maybe these tops, maybe something like this, just to get a kind of a approximate resistance level with this trend line here. So let's see where the price is moving. Now you can see here we get the break. Now maybe I can readjust this. If I readjust it like this, it means that the price still has the potential to move further up. So in this case it's not such a precise measurement, because I mean on the 1-minute chart it's also, but it's an approximate measurement. So if I want, I would place the trade down maybe on the closure of this candle, or maybe the price, if I really want to be precise with these last 2 touches, then I would wait for another green candle to go a little bit higher. So if you're impatient, again, here you would be placing the trade down maybe with 10-minute expiry, but on the other hand we want to wait to be more secure and to be more precise with this measurement. We want to wait until the price breaks above this trend line here. So let's see what happens now. It breaks and it retraces back. So after this happens, it's on the 1-minute candle. We still didn't get the closure of this candle above the trend line. As I explained, I always want to see the closures, like this one here maybe, or if we are looking at this horizontal trend line like this one here, I want to get the closure above the level. But if you are impatient, then you are trading because actually the price broke and it was rejected. So it means this 1-minute candle closed, it already broke this level and closed below this level. So if you're impatient, you would probably want to take the trade down here. In this case, it would be maybe 5-minute expiry, 5 or 10-minute expiry, but the price has more potential to move up and close above this level. If it closes, then it's a more secure trade. So in 5 minutes, 1, 2, 3, 4, 5, it would be a winning trade. Let's take a look at the 10 minutes. So okay, you can see another attempt. This is because we didn't still get the closure. So in 10 minutes, it would be 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. In 10 minutes, it would be a losing trade. But in any case, now if we were waiting for the closure of the candle in this situation, we didn't get the closure here. So this is why we placed the trade earlier. So we can do the same thing with this touch here, because it was another attempt, and you can see obviously the price is going higher, and at some point it will form a longer resistance because it has the potential to go all the way down to this level here. So this is another situation where you could place 5 or 10 minutes trade down. Probably better selection would be 5 minutes, but 1, 2, 3, 4, 5, it would be a valid trade, and also with 10 minutes it would be a winning trade. So still I'm looking for this lowest trend line and for the price to touch or break this level if I want to trade up. Now you can see the resistance is formed even before the touch here. Okay, so here we have this touch, and actually this is the touch. As I said, I always want to see the break, so in this case probably I wouldn't want to trade this up at this point. Let's go a little bit further. So here we have the break. Okay, so to get the next valid resistance trend line, I would connect this point here and this point here. And as we have the break here, the price really it has the potential to move all the way down here. So in this case, now especially if I want to help myself even with drawing the horizontal support level, it would be one of these levels would be here. So on this break I wouldn't trade up because the price was trading in a channel, and finally it resulted in actually in a break. It is a first break below this level, but it's still, for me, because I know that this has more potential to go down, I wouldn't trade this up. Now, okay, if you would trade this up, you would make a winning trade. But the next situation we have here, I just want to remind you about the video about horizontal support and resistance levels. So it means we had the break of this trend line here, then the bounce, and this is the confirmation of this break here. So in this case, you could place the trade down here. Okay, so now it comes back above this level, and we can already see where we can draw another trend line. It's by connecting this top here and this top here. And you can see now the price is actually breaking this horizontal support and resistance level and the trend line here. So this is one of the best situations where you could place the trade down. So it's actually the first break above this trend line, and also after we had the breakout pattern here to the downside, it's the retracement and first break above this horizontal support and resistance level marked by this red line. So this would be the price breaking two resistance levels at the same time, and we had a breakout pattern just before. So this could be a bit longer expiry time trade down, maybe 10 minutes, because it might form some more resistance here, but I would say 10 minutes. Even if you place a 5-minute trade, it would be probably a good expiry time selection. So 5 to 10 minutes down. So this is this resistance that is formed. So 1, 2, 3, 4, 5. It would be a winning trade, and obviously also the 10-minute trade would be a winning trade. So let's just move a little bit further. Let's see what's happening with the price. So here's the second attempt to go up, but I can already draw a lower support level here, trend line. So connecting this point and this point. Now the price here, by breaking this was the first break, first attempt of a break, it retraced back, it came into this little triangle, breakout, and now it's trading above this trend line here. But I have another line also here which acts as a support. So let's see, now the price is trading in this triangle, in between this horizontal resistance level here and this trend line support level here. So again, you can see that this white candle actually, the price went below. It didn't close below, but it formed a bounce of this level, and now it came into this channel. So let's see what happens next. Okay, so here you can see I have the next possibility to draw some trend lines. Now I can draw, and trend lines are really a flexible tool, and but you can see that they work, you know, like they will give you a lot of freedom about how to draw them, but they are valid in many cases. So I can connect this point here and this point here, and the next trend line which I can draw, if I move a little bit further. Okay, so on the break of this level here, we had one pierce of this level, the second one. So in this case, it's not such a secure trade to trade up, but on the other hand, we had the first closure of the candle below this trend line. So based on this, that we have the first closure, it could be a possibility to trade up here with 5-minute expiry, but on the other hand, probably I wouldn't enter this one if I would want to be most secure. And why I wouldn't enter? Because now if we connect the lowest points, you can see that actually if I draw a trend line, I could draw it from here to here. So the price has more potential to move all the way down to this level. And to get another level of resistance, I can connect this point here and this point here. So like this. So the price has now the tendency to move all the way down here or the first level of resistance would be here, the second level of resistance would be here, but our first possibility of a trade is actually on this break. So this would be 5 minutes up. If it moves down, then we're getting the next one. So 1, 2, 3, 4, 5. This is green candle closes above our entry position. So in this case, it would be a winning trade. And now it moves up. So if we would wait for the next opportunity to break this level, we wouldn't get the trade here. So this is, I mean, it's always left to your judgment where you want to place the trade. But if you would want to be more secure, then you wouldn't place this one because, as I said, based on these trend lines, the price has the tendency or the possibility to move even lower. So now you can see it's trading in between this level and forming multiple breaks through this level. So I would delete this line because it's not valid anymore. It's like the price is trading around it, so it's not, it's forming resistance or support, but probably I would want to delete because it's not such a valid level anymore. Now the next valid level is this one here, and this one here, and this one here. So here we have the first break and closure above this level. So again, as I explained earlier, this would be a possibility to trade down. 5-minute expiry if we are counting on the short-term resistance. On the other hand, if we are looking at this horizontal support or resistance level, in this case it is resistance because the price was trading below it, we see that it was break below. Retracement here it was rejected, and then first break here. So it means now it has more tendency to continue in the break. But before we see this break, the price also has a lot of tendency to move all the way down here. So in this case, it would be a valid 5-minute trade down. 1, 2, 3, 4, 5. It would result in a winning trade. And now, as it formed this break, this is again the first break and closure of the white candle below this support trend line. Definitely, this is a valid trade up because we saw. Now you can see that the price is trading in this triangle, but in this case, again, it would be a short-term expiry. Maybe we see it even go all the way up here later as it breaks out of this triangle. A lot of times when you draw trend lines, you will see, let's say, as its situation in this is in this situation when we see this support, this resistance trend line here, and if you're looking at this support trend line here, you can see it's kind of a triangle. And as the price is coming into the triangle, it will have the tendency to form a larger break up or down. So in this case, we can trade up here with 5-minute expiry. Maybe it will be a losing trade, maybe it will result in moving lower, but it still has, if we take a look how much space we have for this triangle to close, we still have enough space for a 5-minute bounce higher. So okay, 1, 2, 3, 4, 5. It would result in a winning trade. Now, okay, here we have the next resistance with this green candle and break above this level. So definitely, as this is second break of this trend line, we are coming into this triangle that is closing in, and it is first, second, third, fourth, fifth attempt to break this red line to go higher. I wouldn't place the trade down on the closure of this candle, because now if this means that this triangle was broken, the price has the possibility to continue moving higher, or a lot of times you will see it move higher and then just drop down. But in any case, I wouldn't place the trade here. So this is what it shot up higher and then it broke down. So I just wanted to emphasize that on the end of these triangles, when you draw them, you will see situations like this. Larger movements of the price, and I don't know, maybe if you're trading touch options or high yield touch, if you take a look at these situations, these are good situations to maybe place a high yield touch but probably you would want to take a look at the 5-minute chart to trade these ones. So now you can see that all this actually it expanded our trading space. So now the next trend line that I can draw is by connecting to draw the highest resistance trend line would be this one, and now to the downside I can again readjust this one, and I would connect this point here and this point here. And this one, it's still valid, but it's not a trend line to rely on, because now we're getting this one and this one as the highest and the lowest points. And here we have a strong drop. So actually this line here, it was just connecting these tops here. So this is not valid for quite some time. So we said here we had the next one here. On this break, this would be a possibility to trade up. So if you trade up here, you would make a losing trade. Obviously not in all the situations like with binary options trading or any kind of trading. There is no guaranteed positions on the charts where you would make 100% winning trades, but in any case I'm just explaining the validity of this trend line. So the next one I can draw here. Now this is the valid resistance, this is the valid support. Okay, so as the price is touching this level here, trying to return after it formed a break, trying to return back into this zone, this would be the first resistance level. You can see the price, actually this green candle touched this level, then we had the break of the price, it went higher, it was rejected. Even after this rejection you can place the trade down, but in this case maybe now if I draw a lower support, I can connect this point here, this point here. So from this point to this point there is still some space for the price to go lower, so it would be a 5-minute trade down. So if you trade on the closure of this candle, 1, 2, 3, 4, 1, 2, 3, 4, 5, this one closes here, would be a winning trade. And if you trade here on the closure of this green candle, 1, 2, 3, 4, 5, it would be a losing trade. But as I said, we always want to see the break, retracement, or it's best if you see the closure of the candle above the trend line. So here again we have, if you take a look at this trend line and this trend line, we have price getting squeezed into this triangle and shooting out of this triangle. Now this might mean it might drop all the way down, or it might again form a larger movement, as we saw it like on the closure of this previous triangle that we had drawn here, but we had this situation. It means it can form kind of larger movement again. So I wouldn't place the trade up here yet. I would want to see what happens, because we are getting in the end of this triangle. As you're getting into the end of these triangles, you really don't want to maybe you want to avoid making trades, because we can expect larger movements. Okay, so this is what happened. Now if you would place a 5-minute trade here, 1, 2, 3, 4, 5, we'll make a losing trade. If it would be 10 minutes, because you can see it shot out and then it went up here, and look, it went almost all the way up to this level. Now you can see all these large movements, but you can see at all the time all of these levels are actually valid. But I really want to see the market settles down a little bit before I enter trading. That's some big movements. Probably there's some news forecast or something that affected this. But you can see also, let's say this is one of the trend lines that we have drawn earlier, and you can see even if the price forms such a large movement, still this acts as a support, or I mean resistance in this case. So now I can continue drawing these trend lines like this, and maybe like this, and you can see it's always a valid support and resistance. Now there's a lot of freedom in drawing these trend lines, and I just want to show you, if you are on the end of the chart, I just want to delete all these objects. Of course, all these trend lines can be also combined with stochastic. So stochastic or Bollinger Bands. If you're getting a break above the upper trend line, resistance line, and at the same time you're getting stochastic above level 80, this is additional confirmation for the trade down. And if you're getting a break below the lower support trend line and stochastic below level 20, this is additional confirmation to make a trade up. So I just want to show you, if you are on the end of the chart, as usually you are when you are trading, how to properly draw support and resistance levels based on this. Let's say here I'm now on the 5-minute chart. How to properly draw support and resistance trend lines. You would take the highest and the last two highest points. In this case it would be maybe this one and this one, and the last two lowest points, which would be here and here. So this is the last drawing of the trend line. So if I take a look maybe at 1-hour chart, then I would draw this and this point, and this point here, and this point here. But there's a lot of freedom in drawing the trend line, so the best way to draw it is just to open the charts. In this case I used the MT4. You can also draw it in free stock charts or in NetDania, TraderView. So feel free to experiment with this, and hopefully I gave you some information. It's hard to structure the information with trend lines because there's a lot of freedom, but you can see they actually act as a support and resistance levels, and this is what is important. And also, as I explained, I didn't actually explain in this video, but it's very good to combine them with kind of oscillators like stochastic, RSI, which will give you the relative overbought and oversold conditions. And then if you define the absolute high and low levels with trend lines, then you know where you can expect the price to bounce. If you have a few bounces of the same trend line, you see that the price is going into the triangle, you can expect a breakout. Then you can also trade the breakout pattern. And again, there are many possibilities on how to use the trend lines. Hopefully you got some good information in this video. And if you like this video, please give me a like. For more information, you can always visit my website at the www.realbinaryoptionsreviews.com. So thank you for watching this video, and all best with your trades. Bye bye.